Good morning and welcome to another edition of Pre-Market Post Game with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we put in your hand each and every trading day. Today is our special edition. It's called Take Back Friday. This is the day where the markets that have been down decide they're going to pop up just for some profit taking, and vice versa. If it's been up all week, it'll probably be down today. This is just that weird phenomenon. Now, it's not a 100% guarantee, but I would say it's more like 99.9%. And of course, there's always some news that can come out to change all of that. And then the rest is history. Excuse me. All right. So this morning we had the jobless claims, man. That was the big thing that the markets were waiting for. It had the potential to be a big market moving event. And I'm here to tell you it has been an enormous market moving event. It was a shock to the markets in a huge way, a big shock to the markets. And we're going to investigate and take a look. Excuse me. But before we do that, you know how we roll. Let's go ahead and let you see for yourself how these markets are All right, can you guys hear me now? Testing, 1, 2, 3. Can you hear me now? Can everybody hear me now? Testing, mic test 1, 2, 3. All right, I'm back. I am back. Don't know what happened, but it's good to be back. All right, let's pick up where we left off at and see if we can get this on and popping. All right, so first things first, a look at the overnight markets. The Dow is now up 747 points at 26,999. The morning high so far is 27,043. NASDAQ 100, which was down, is now up 55 and a quarter points at 96.81 and 3/4. The morning high was 97.04 and a quarter. E-mini S&P 500 is up 64 points at 31.74 half and is trading near the highs of the session. The Russell is up 66.3 points at 1518.7. The high so far this morning is 1522.9. Bitcoin futures composite index is down 140 bucks at 97.55. The overnight low was 96.77 and the overnight high was 99.50. Excuse me. Nat gas is up 2 cents at $1.85. Crude oil is really on fire. It's up $1.47 a barrel, trading at $38.87. The overnight high was $39.57. I did tell you that $40 was in play. I gave you those numbers last night. Let's see where it closes. All right. The long bond is down 2 full points in 3/32. Really getting sold off here, trading at 171 and 28/32. The real story, though, the real tragedy of the morning is gold futures. Gold futures right now, as we speak, are trading near the lows of the session, down $44. $44 to the downside, trading at 1684. That's right, $1,683.50 as we speak. The low of the session so far is $1,681.60. I told you the other day on the end of the report that I was afraid that was going to happen. We had a crash alert. What did you expect? This is exactly why I say you ignore the rally and crash alerts on the PulseWave price trigger reports at your own peril. Silver off 60 cents, trading at $17.46. It could not hold the $18 handle. I was afraid of these crash alerts coming out today, man. The Euro dollar is off 41 pips at 113.11 because the US dollar has broken into the 96 handle. We're at 96.82 and the dollar pulling further and further away from par, but it's up 14 pips. So because it's up 14 pips, the euro is off 37 pips at 113.14. Pound sterling is up 81 pips at 126.95. The Aussie is up 46 pips at 69.86. Canadian dollar is down 86 pips at 134.09. And we got, 134.10. And the euro yen is up 37 pips at 124.06. And the dollar yen is up 50 pips at 109.66. The Kiwi New Zealand dollar is up 50 pips at 65.15. Soybeans are up 3 1/4 points at 8.71 even. Corn is up 1/2 cent at 3.29.5. And the wheat is up 3/4 point at 5.24.5. Very interesting development. Now, you may ask, what in the world caused this? The market wasn't this way before 8:30. I can tell you that. It was not nearly as powerful on the ups or downsides. But we had some breaking news that ADP jobless claims report came out, and those massage numbers makes it look like happy days are here again. And basically what it's massaged to do was to show that instead of make it look like it's adding jobs, but what it was is just more people going back to work as states reopening. So, but it made it look like basically new jobs were created out of thin air, which we all know the truth about that. It's only a matter of time before the economy can't fake it anymore. So that is the explanation for that. All right, so what's up to everybody in the live stream? What up, Kyle? You said the Canadian dollar finally paid on that crash alert? Yeah, man. So, like I say, sometimes you got to let the trades develop. You know what I'm saying? You got to let them develop, and they will develop if you're just patient enough, you know? All right, so today I set before you a series of choices. It is up to you to decide what you would do moving forward. All right. It is up to you to decide how we move forward. I'm going to set before you, I would say, some choices. Okay. You have choices today. Prepare yourself. This morning, I set before you two options. You can take the red pill or you can take the blue pill. But I must warn you, if you take the blue pill, you will never be able to take the red pill again. If you take the red pill, you will not be able to go back and take the blue pill. If you take the red pill, you must be willing to accept everything that comes with it. And that includes you will need probably 2 cups of coffee. You might even need a pint of vodka. If you decide to take the blue pill, nothing is required of you at all. As a matter of fact, you don't have to do anything. But I do warn you, although the path to the blue pill may be easier and smoother to digest, the red pill is not. The red pill will be violent and even shocking. You will need to put on your big boy pants and your big girl pants and get ready to rumble. I will give you guys a few minutes in the live chat to decide which pill you would like to take this morning. Trust and believe you will be in for a treat. So while you're voting, I will give you the overnight news. Global stocks rise as investors digest the ECB's huge new stimulus package and await U.S. jobs data, which is already out. Oil prices rose as OPEC Plus may end up meeting as soon as today after Trump's meeting got canceled over compliance issues. Investors pumped $22.5 billion into U.S. bond funds in a single week, the highest amount since 2007. Bond markets seem to be attracting investors despite carrying higher risk compared to the safe haven money markets. They're putting money markets as a safer place to put your money than bonds, than U.S. bonds. Like I said in last night's video, the bond market is in trouble, especially with bond futures, bond prices falling 2 full points. An investment advisor with historic ties to Warren Buffett likely scored a $900 million gain on Wayfair stock in less than 10 weeks. You know, we've been covering that Wayfair in our end of day report. The ticker is W for those so inclined to look into it. The manager of the Sequoia Fund, which was founded at Buffett's request in 1970. Wow, that was a beautiful year. doubled down on the e-commerce giant last quarter. The Trump campaign cries censorship after Twitter removes a video about George Floyd on copyright grounds. Last year, Twitter took down a meme of Trump's attacking Joe Biden because it used a clip from Nickelback's Photograph. It lets you know who owns Twitter, who really is behind Twitter. It's obviously a Democratic money backing situation because everything that Trump tweets, they're either deleting or putting some kind of disclaimer on it or what have you. So we're watching political fighting. And I have to tell you, normally it's for our benefit. But in this case, they're actually really having infighting at the top because there's really no difference between Democrat and Republican. And when they do things and stage it, it's usually for the public's benefit, while behind closed doors, they laugh at it and push through legislation that they want to push through. But in this case, they're really, really having some infighting. Power grabs are up for grabs. LinkedIn CEO apologizes after an internal meeting about racial inequality and bias was hit with appalling comments from anonymous employees. LinkedIn released a report last year showing just 3 to 5% of its workforce was Black. British Airways parent company considering legal challenges to UK quarantine rules. We think it is irrational. We think it is disproportionate, and we're giving consideration to a legal challenge to this legislation, said Willie Walsh, AIG CEO. China says forcing Chinese firms off U.S. exchanges will harm U.S. A foreign ministry spokesman said forcing Chinese firms to retreat from U.S. stock exchanges would severely harm U.S. interests. First of all, let's be honest, with this whole globalization, isn't it every country is on each other's exchange, basically? So that's kind of weird. But to take a country off, to me, is usually the precursors for war anyway. That's why you're cutting all ties. You see what I'm saying? Yeah. They usually do that when they're gearing up for war. They kick out all of the quote-unquote foreigners. Yep. Singapore plans a coronavirus contact tracing device for all to wear. The country plans to soon launch a wearable device that, if successful, will be distributed to all of its 5.7 million residents. A wearable device. Coronavirus contact tracing device. Of course, that's what they're going to call it. Doesn't matter what name they give it. It's still mark of the beast technology. You're basically going to be under house arrest. Why don't they just stop trying to reinvent the wheel and just make everybody wear an ankle bracelet and say you're under house arrest? You can only travel but so many feet from your house. So that's basically what it is. Let's just call it what it is. Economic data released today is the U.S. non-payrolls, which already came out at 8:30, unemployment rate. Baker Hughes U.S. oil rig count and consumer credit changes are due for release. All right. That was your last chance. That was your last warning to make a decision on which pill you wanted to take this morning. Let's see what the voting looked like here. Let's see here. All right. Excuse me. All right. The votes are in. The votes have been tallied. The unanimous agreement is the red pill. People think that they got it. They ready for the red pill. All right. All right. Remember, ladies and gentlemen, you asked for this. So let's get it. All right. Jobs report shock. May payrolls rose by 2.5 million, crushing expectations of 7.5 million drop. Unemployment rate slides. All right. In our preview of today's historic jobs report, we said that on one hand, the labor picture will be far worse than anything observed before in U.S. history, eclipsing the darkest days of the Great Depression. On the other, nobody will care and markets will likely soar, as the report tells us that what we already know. And then there is little in the BLS report that will offer any forward-looking insight. That will depend on progress regarding the reopening of economies and official support measures. Well, take all of that and throw it out the window, because moments ago, the BLS shocked markets when it reported that, in line with much more optimistic ADP report, not only did May payrolls not drop to the 7.5 million expected to drop, but actually increased by 2.5 million, crushing expectations. Just as shocking is that the unemployment rate, which was expected to surge to a record 19.1% in May from 14.7% in April, actually declined in May to 13.3%, although Black unemployment did rise modestly. Black unemployment rose modestly. Black unemployment rose modestly. And in continuing the bizarro world of now completely meaningless data, the average hourly earnings dropped from last month's revised 8%, actually dropped to 6.7%, also mocking expectations of an increase to 8.5%. I hope you were listening to that report, because it's not a joke. Markets are no longer the signal we can look to as any kind of indicator. This is going to be another shocking U.S. payrolls day, as we already know. How does one even begin to describe the most important data series in the world for markets, recording a drop of 7.5 million in May, according to consensus expectations, on the back of a 20.5 million job losses for April? Even if 80% of these jobs bounce back quickly as the economy reopens and lockdown now appears to be totally over in people's minds in the U.S., we still face an appalling labor market future. Wage growth, wage cuts will loom as an automatized, desperate labor force takes what it can get, given the underlying socio-economic conditions were hardly healthy to begin with. For those not riding the asset gravy train, things look grim. One could even imagine large-scale street protest and/or rioting breaking out. But what am I talking about? We're already there. Of course, with the rare exception of a dip in stocks yesterday, which was far higher up the list of today's Bloomberg headlines than any other looming payrolls disaster, none of this matters. Not only are stocks way, way up, but the key FX says risk on, and bond yields are rising sharply too. US 10s, for example, are up from 0.54% on the 9th of March to 0.82% at the time of this. Yes, that's a small move in the bigger picture. Yes, the economy is newly reopening in order to protest. And yes, it's still a level that one would never expect to see outside the readership of the daily. Yet a new OPEC plus oil deal today aside, where is the reason for optimism that any reflation is coming in a post-virus U.S. economy, with a perennial labor versus capital struggle is now an arm wrestle between Sheldon in the Big Bang Theory and Dwayne "The Rock" Johnson? One would think such simple truths will be covered in the financial market press. They aren't. For the most part, it's missing. It's invisible. It does not exist. No matter how interesting the facts, the editorial line of what the story was going to be, the opposite conclusion, had been set in stone from the start. They were powerless to change their narrative. No matter. One would think simple truths would still be covered by financial market analysts. They are not. How many have read any Marx or his intellectual proteges from Kalaki to Minsky to Piketty, who have pointed out negative rates, financial collapse, and that inequality does not just go away by itself? No matter. One would think such simple truths would nonetheless be reflected in financial markets themselves. Of course, they are not, given what central banks are doing. Yesterday, the ECB offered up another euro 600 billion in bond purchases that will stretch out until summer 2021. How can markets reflect fundamentals when there are no fundamentals that matter for markets above that liquidity? How can financial analysts reflect anything but that simple liquidity dynamic too? The shallower, the less well-versed in theory, history, and reality their call is, the better it proves. Just look where central bank billions and trillions are flowing and follow what you see. Follow the money. Nothing else matters. This is not financial repression. It's reality repression. It seems appropriate on another earth-shattering bad U.S. payrolls day. That is nonetheless what we are seeing. They massage numbers. They play some type of accounting ping pong. We pretend to work and they pretend to pay us. The worrying parallels between low pay, low productivity, and OECD economics have slumped into ever since they adopted neoliberal efficiency. Yet things are now even worse in financial markets. We can add, we pretend to trade and they pretend to regulate. There is no regulation. There is asset price targeting and there is no trading, just a reflection of the orders of the monetary looking out for the good of society. That's correct. That's why we do the PulseWave price trigger reports, because we're trying to help as many of the helpless as possible. The less lemmings, the less sheeple there are, the harder it will be for them to bring about their new world order agenda. Of course, this won't end well. It is already ending badly. Even Elon Musk is on Twitter arguing that monopolies like Amazon are bad and need to be broken up. One might want to pay attention. It is just that markets are no longer the signal we can look to for any kind of indicator anymore. So, the Global Times has recently blared out, it is just a matter of time before China overtakes the US. Technically, this will come true in the second quarter of 2020, given the Atlanta now projection of near a 50% drop in US GDP. But of course, this is only temporary. Most market analysts find it hard to grasp that deeply troubled as the US is, China's prospects are not much brighter if an alliance of other major economies rally against it on trade, technology, capital flows, and security issues. In that kind of scenario, one can realistically project Chinese GDP growth to grind down to about 2% to match that of the US, meaning that after another few years of gap closing, China levels off at around 75% of the size of the US economy and never overtakes it before relative demographic differences then put things into reverse. How many business models and management consulting straight line growth projections and financial market forecasts go out the window if that happens? In which case, note that yesterday, India and Australia signed a mutual cooperation pact to use each other's military bases and to develop common standards on communication technology, meaning 5G. The Global Times response to India's invite to the upcoming expanded G7 was already that if India hastily joins a small circle that perceives China as an imaginary enemy, China-India relations will deteriorate. Expect angrier retorts ahead, which have already been seen versus Australia. Also note that today has seen the launch of IPAC, the International Parliamentary Alliance on China, an international cross-party group of legislators to reform the approach of democratic countries to China. This is not anything to do with the Belt and Road Initiative. It is more the Belt and Roadblock Initiative. Of course, it's better for your near-term financial safety to ignore today's global seismodot and keep following the official line. Yet, please note that 2 days before the fall of the Berlin Wall in 1989, the UK communist newspaper, the Morning Star, proclaimed, "What we are seeing now is not the crisis of socialism, but the crisis of the outdated model of socialism. Those who are ready to bury socialism because of the difficulties we are going through will be disappointed. The cause of the Great October Revolution is immoral. On the evening of the day the Berlin Wall began to collapse, its headline was GDR Unveils Reforms Package." That is hilarious. That is very hilarious. And it is a good foundation for taking you to the dark side. Are you ready? Prepare yourself. Just when it seemed that the record 40% rally from the March lows was coming to an end, as Treasury yields blew out and tech names rolled over on record volume, the euphoria came back with a vengeance, sending stocks around the globe and U.S. futures surging as the delivery of both monetary and fiscal stimulus in Europe supplanted virus concerns and trade fears. On the day the U.S. is expected to report a 19.1% unemployment rate. On Thursday, the NASDAQ 100 became the first U.S. equity index to reclaim its all-time high, with the rebound driven partly by tech-related firms including Amazon and Netflix. The broader NASDAQ composite, which is more closely watched than the NASDAQ 100, is just about 2% below its own record high, while the S&P 500 and the Dow Jones indexes are 8% and 11% below their respective all-time highs. The S&P 500 is on track for a third week of gains as the VIX and V2X returned to the week's lows. And the sliding dollar has fallen to the lowest since March, while Treasury yields jumped 0.87%, rising above a key level of 0.84% that sees CTA turn short on Treasuries. I've been warning about the Treasuries day after day at the end of day report. Is anyone listening? Does anyone care? Is anyone paying attention? I hope you are. It's pretty obvious, ladies and gentlemen, this will end badly. Badly. With retail investors taking over the extremely illiquid market, resulting in crazy intraday swings with a horde of Robinhood retail traders alone can send a stock soaring and also tumbling. Many veteran investors are throwing in the towel on what is emerging as the most furiously ridiculous rally in history and what is now better known as Jay's market, with 73% of Wall Street claiming that the market is only up due to artificial gimmick of the Fed's balance sheet explosion and not due to fundamental factors. And with one after another investing legend, such as Warren Buffett, Stanley Druckenmiller, David Tepper, boycotting the artificial rally and either selling or pulling out altogether, today GMO's Jeremy Grantham became the latest to bail on what Bank of America recently called a fake market. In a letter to GMO Investor, Grantham writes that we have never lived in a period where the future was so uncertain, and yet the market is 10% below its previous high in January, when superficially at least everything seemed fine in economics and finance. And if not fine, well, good enough. The future paths include many that could change corporate profitability, growth, and many aspects of capitalism, society, and global political scenes. In short, the veteran value investor known for calling several of the biggest market turns of recent decades admits he has lost his faith in an upside case. Unlike the retail day trading army and his sense of direction in a world of record uncertainty, which in some ways seemed the highest in experience as a result in terms of risk and return, particularly of the worst possible outcomes compared to the best, the current market seems lost in one-sided optimism when prudence and patience seem more appropriate. Grantham also highlights the obvious, that the market and the economy have never been more disconnected, and points out that while the current PE on the U.S. market is in the top 10% of its history, the U.S. economy, in contrast, is in its worst 10%, perhaps even the worst 1%. This is apparently one of the most impressive mismatches in history. As a result of this total loss of coherence, driven by trillions in central bank liquidity that have propelled a massive wedge between fundamentals and stock prices, GMO, the Boston fund manager, Mr. Grantham, co-founded in 1977, which is also a pretty good year, cuts its net exposure to global equities in its biggest fund from 55% to just 25%, near the lowest levels in reported during the global financial crisis, according to a separate update from GMO's head of asset allocation, Ben Inker. Are you listening? 55% allocation dropped to 25%. That decision, according to the Financial Times, slashed GMO's benchmark free allocation fund exposure to U.S. equities from a net 3 to 4% to a net short position worth about 5% of the $7.5 billion portfolio, said Inker. Perhaps the first time the fund has turned net short U.S. stocks since the crises. This after GMO loaded up on stocks during the sell-off, but has since cut off-loaded its exposure to the U.S. market following the unprecedented 40% rally in the past 2 months. Are you getting scared yet? Can you picture yourself driving down that lonely road by yourself, and all of a sudden, everything gets darker and darker? And then you hear the introduction to Tales of the Dark Side start playing in the background. That's where we are, ladies and gentlemen. The COVID-19 pandemic should have generated enhanced respect for risk, and it hasn't. It has caused quite the reverse, Grantham told the Financial Times. He noted that trailing price earnings multiples in the U.S. stock market were in the top 10% of its history, while the U.S. economy is in its worst 10%, perhaps even the worst 1%, echoing what he said in his quarterly letter. And while markets seem to be taking all the negative news in stride, Grantham is worried that the wave of devastation that is coming is unlike anything experienced before. Grantham is again worried that the wave of devastation that is coming is unlike anything experienced before. Wave of devastation. A wave is an enormous body of water that crashes into physical material. It can be live animals, it can be trees, it can be roads and bridges, it can be buildings. It doesn't matter. When that ginormous tidal wave, like the one seen in the movie Deep Impact, when it crashes into your reality, what is going to be the outcome? At GMO, and I quote, this is a quote from Grantham in his letter, quote, at GMO, we dealt with three major events prior to this crisis, and rightly or wrongly, we felt nearly certain that sooner or later we would be right. We exited Japan 100% in 1987 at 45 times and watched it go to 65 times for a second bigger than the US before a downward readjustment of 30 years and counting. In early 1998, we fought the tech bubble from 21 times equal to the previous record high in 1929 to 35 times before a 50% decline, losing many clients and then regaining even more on the round trip. In 2007, we led our clients relatively painless through the housing bust. In all three, we felt we were nearly certain to be right. Japan, the tech bubble in 1929, which sadly I missed, were not new types of events. They were merely extreme cases akin to South Sea bubble investor euphoria and madness. In 2008 event also was easier if you focused on the US housing euphoria, which was a 3 sigma 100-year event, or simply unique. First of all, ladies and gentlemen, 3 sigma is enormous. On average, you usually fluctuate between 1 to 2, but a 3 and a 4 and a 5 and a 6, once you get to 3 is already like far-fetched, all right? Once you hit 3, the gloves come off. And if you hit a 4 or even a 5 or a smack, it's game over. You know what's coming when that happens, ladies and gentlemen. We calculated that a return trip to the old price trend and a typical overrun in those extreme house prices would remove $10 trillion of perceived wealth from the US consumers and guarantee the worst recession for decades. All these events echoed historical precedent. And from these precedents, we drew confidence, end quote. I agree with him 100% in that statement, in that above paragraph. But this event is unlike all those, ladies and gentlemen. This is unlike any of what he said. It is totally new, and there can be no near certainties, merely strong possibilities. This is why Ben Inker, our head of asset allocation, is nervous, and this is why you are nervous or should be. There's a saying that we have at PulseWave Trading in the trading room. When your leader is exiting the room, what should you be doing? Or put more plainly, when your sensei tells you to follow him outside, what do? Do you stay in the building and ignore your sensei? Of course you don't. When your mom or your dad says, it's time to come in, and you're only a 7-year-old child, what do? Time for dinner, come in. You come in the house, especially if you're starving. You're going to come in the house. You want to eat. You do what those who have charge over you and care for you, you do what they ask you to do, right? Because you know that what they're telling you is good and it's right because they love you and they care for you and they're looking out for your best interest. So once again, If you see your leader exiting left, what should you be doing? Those who have been following me for many, 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 many years, you've heard me say it before. Back during the housing crisis situation, what did I say? I said, when Mr. Trump, Donald Trump, Mr. Real Estate told you he was exiting left of U.S. real estate, what should that have told you? All right. When you see when you see Trump making moves, George Soros making moves, Mr. Buffett making moves, all right. When you see that, when you see Paul Tudor Jones making moves, what should you be doing? When you see Jim Rogers making moves, what should you be doing? Should you stand there and continue along the path, or should you exit left with those gentlemen? We're not talking about their personalities. We're not talking about their character. We're not talking about some of those on the list that are part of the Illuminati. We're talking about the markets and investing right now. When you see those giants of markets and investing in real estate make a move, what does that tell you? Come on now, class, wake up. You know exactly what that tells you. You don't need to understand it. You don't need to know why or the hows or the details. You just get up and walk your behind outside with them. You can get all the particulars later. Or lastly, like I always tell you in the movie reference Jurassic Park, when they first put their feet on the island and saw the stampede of dinosaurs running in the opposite direction, what should that have told them right off the jump? Get your behind that way. Exit left. It's time to get up and go. While they were running beside the dinosaurs, they could say, hey, yo, Tyrannosaurus Rex. Yeah, what's up, man? Hey, why are we running? Oh, man, there's a huge dinosaur over there, man. Oh, he's incredible. Oh, yeah, he'll eat all of us. He ain't no joke. Oh, okay, man. Hey, yo, good looking out, T-Rex. Hey, no problem, man. Anytime. All right, I'll holler back. Peace. That's all they had to do. That's all they had to do. But nope, they didn't do that. They kept on moving down the path. And the rest is history. We know that pretty much 95% of all the cast of that movie got eaten by dinosaurs. You're right, Kyle, in the live chat. It's called situational awareness. Exactly. Being able to read a room, right? Situational awareness. That's right. You got to be able to read the room. All right? But right now, we don't have, it's like people don't have no situational awareness. They lack the ability to respond. Instead, they're rioting and destroying personal and public property, but they're not reading the tea leaves. They don't know they have no situational awareness. We're already in a bad way. We're already in economic depression, but they want to go and destroy stuff. You want to tear down the stores that you're going to be relying on tomorrow. You're going to need them same establishments that you destroy. You're going to need them. And many of the establishments that you are destroying are Black-owned businesses. Many of the lives that are being lost during this rioting are Black people. Let me get back on track. While the uncertainties are indeed large, one can triangulate a sufficiency material dose of certainty about what is coming. And as Graham explains further, it is not pretty, especially with the U.S. economy already on the back foot, headed into a crisis. Quote, we had U.S. and global problems looming before the virus. An increasingly disturbed climate causing global floods, droughts, and farming problems. I would like to add to that, you guys, we've been having a lot of earthquakes, and there's been a lot of talk about some major fault lines going up. And that includes Yellowstone, ladies and gentlemen. Slowing population growth in the developed world, soon to be negative, and steadily slowing productivity gains, especially in the developed world, and therefore a slowing GDP trend. In the US, our 3% a year trend is down to, at best, 1.5%, in my opinion. It is closer to a 1% maximum in Europe. We had, as mentioned, top 10% historical PEs in the US and much of the highest debt level ever in the US for both corporations and peacetime government. So after a 10-year economic recovery, this would have been a perfectly normal time historically for a setback. And then the virus hit. Simultaneously, it is causing supply and demand shocks unlike anything before, ever. It is generating a much faster economic contraction than that of the Great Depression. And unlike 1989 Japan, 2000 tech bubble, and 2008 in the US and Europe, it is truly global. The drop in GDP and rise in unemployment in 4 weeks have equated to what took 1 to 4 years to reach in the Great Depression and were never reached in the other events. Rogoff and Reinhardt, Harvard professors who wrote the definitive analysis of the 2008 bust, agree that this event is indeed completely different and suggest it will take at least 5 years to regain the 2019 levels of activity. But this is a guess. This is a optimism guess. We really don't know how long it will take. Nearly certain is that a V-shaped recovery looks like a lost hope. I'm here to say a V-shaped recovery, a U-shaped recovery, a W-shaped recovery, any recovery is a lost hope. I warned about this back in 2016 when I did the documentary, There Is No Collapse, and then I followed that up with another documentary, The Federal Reserve and Bitcoin versus the central banks and the blockchain. Previous to both of those entries, back on the famous late great Charlie McGrath's Wide Awake News show back in 2013, we talked about this. And I warned that after the greatest bull market of history and the 100-year cycle, everything will fall and it will not get back up. I was called a lunatic and a nut. And then everything I said started happening. Everything I told you back then has now happened. And when I gave you those predictions, the market was already down significantly. The best possible outcome would be that there will be almost miraculously billions of doses of effective vaccine by year end. But most viruses have never had a useful vaccine, and most useful vaccines have taken well over 5 years to develop. And when developed, they have only partially been successful. Did you hear that, pharmaceutical industrial complex? Most useful vaccines have taken well over 5 years to develop. And then once developed, they've only been partially successful. Why are we not talking about this in the mainstream media or any other media for that matter? Yes, this time there will be an enormous effort with unprecedented spending, but still, a leading vaccine expert says quick success would be like drawing successfully to several inside straights in a row. And even if it works out well with a vaccine, there will remain deep economic wounds. Let me go back and say this. No, this is an unprecedented situation. I'm throwing money at this thing. But let's be honest. This is not the biggest. The biggest money grab has been the cancer research industry, or should I say the cancer research industrial complex. Trillions of dollars have been thrown at that, and still no vaccine for that, no cure for that. Let's move on. I told you this was going to get scary. Meanwhile, as the world waits for a vaccine and buys stocks confident one is imminent, the bankruptcies have already started. Hertz on May the 22nd, and by year end, thousands of corporate bankruptcies will arrive into a peak of already existing corporate debt. It will need spectacular management, which it may get, but it may not. Throwing money, paper, and electronic impulses at the problem can help psychology, and particularly the stock market, where extra stimulus money can end up, but does not necessarily put people back to work. There will be up to 20% unemployment for at least the foreseeable future. In response to this historic economic collapse, central banks' unprecedented stimulus efforts have temporarily overwhelmed underlying economic realities. But it's hard to believe that will continue. And when it stops, watch out below. Graham told the Financial Times in an interview that after seeing markets price in total recovery, I know it's hard to say that with a straight face. Over recent weeks, my confidence that this will end badly is increasing. Speaking as protests against police brutality and racism filled the streets of U.S. cities, Grantham said previously outbreaks of social instability had few lasting effects on U.S. economy, but there are more things going wrong than normal. Uh-oh. However, the value investing legend most dire prediction was that if you look back in 2 to 3 years and this market turns around and drops 50%, the history books will say that looked like one of the great warnings of all time. It was pretty obvious it was destined to end badly, Graham said, adding, if it does end badly, the history books are going to be very unkind to the bulls. For the sake of the entire generation of Robin Hooders who will lose everything if there is a 50% crash, one hopes Grantham is wrong. Finally, Grantham also chimed in on the most important question in finance right now, revealing that he was proud of not having made a fuss about inflation in 20 years, of writing his widely followed letters, but said that record amounts of monetary easing from central banks had now created the possibility of inflationary pressures. With a generous stimulus program in many countries, you can just about daydream about inflation for the first time in 30 years. To this, all we can add is that in the very near future, that daydream will become a nightmare. I have to tell you guys, I gotta tell you, this is a very concerning piece of information. I've been saying it for years. I've been saying it. Now, I'm about to hit you with something that's going to be very difficult to hear, but you're going to have to hear it. Now, again, I wish I had the ability to play music for a commercial break, but we're going to have to take a commercial break for a moment because I got a situation I need to handle like real quick. My daughter just came and got me. So let me deal with my little daughter. For those that don't know, my youngest child, my little daughter, is on the spectrum. She's autistic. So let me handle this, and then we'll take a commercial break. And I'm sorry I don't have any music for you, but we will be right back. Don't go anywhere because it's about to get real messy. All right, and we are back live. Sorry about that. Don't have any music to play or any of that stuff, so thanks for roughing it with me. All right. Now, we've talked about the jobless claims. We've talked about what's happened with the unemployment rate. We've dealt with a lot of different things. But here's something that is quite appalling. But it is one of those things that you have to deal with. Now, I've talked about it, and so here we go. You got to deal with this, people, because this is coming, if it hasn't already, to a location near you. All right. So I'm about to break you off a little something. Hold on 1 second. We're gonna make this viewable because this sets up our next segment. All right, get ready, peoples. It's going to be a bumpy ride. All right, let's see here. Here we go. I want you to meditate on this photo right here. All right. This, if you can't see it that well, this is a bar. And you see a guy standing next to a robot. This is your robot bartender, ladies and gentlemen. In a post-pandemic world, coming to a store near you. Prior to the COVID-19 outbreak, the trend was in place for artificial intelligence and automation to displace tens of millions of jobs over this decade. Replacing workers with robots has certainly been thrown into hyperdrive in a post-corona world. Strict social distancing enforced by some countries has now given way to reduced forms of distancing in daily life. This is precisely what is happening in South Korea, with some bars and restaurants reopening. At Coffee Bar K in Seoul, a robo bartender has replaced a human, can make perfect cocktails in the fraction of time, reported Reuters. The bar is encouraging customers to return, promoting its use of robots preparing drinks in a contactless environment as a bid to attract patrons and increase sales. Since this space is usually filled with people, customers tend to feel very anxious, human bartender Cha Wan Wu said. I think they would feel safer if the robot makes and serves the ice rather than if I were to do it. Down the street, a robot arm shackles up drinks for this thirsty consumers at the Cafe Bot 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 Cafe bar. Manager Kim Taewon said customers feel much safer with robots handling their drinks than humans. Dun, 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 dun. Cafe Bot Bot Bot's drink robot. I'm trying to tell you guys, you thought that I was play pimping, didn't you? You thought that this was all a game. And now, what do you have to say for yourself, ladies and gents? What you got to say now? What you got to say now? I told you they were coming for your jobs. You didn't want to listen. You didn't want to believe me. Said I didn't know what I was talking about. You wasn't trying to hear it. You said, shut it up with that noise. You don't know what you're saying. And I tried to tell you that everything comes back round. Everything comes back round to these markets. All of this is a part of what is happening, and it is happening. It is not a figment of your imagination. This is happening, ladies and gentlemen. Here's another screenshot of another robot that actually does the drinks for you. Here you go. Deal with it. Excuse me. This is how it is, ladies and gentlemen. This is replacing all those millions of jobs. A post-corona world will be filled with many challenges for bars and restaurants. The most difficult question for operators and managers is how to instill enough confidence in people to bring them back. One way to do this is by automating the back and front end of the restaurant, allowing robots to prepare drinks and food in a contactless environment in the future, and will drive confidence among patrons. Robots to replace bartenders, cooks, and waiters is already here. It's already here. Not coming, but already here. MGM seeks to replace 2,000 workers with robots by 2020. America's first robot bar opens in Las Vegas. Perfect pours every time. Minimum wage below back. Fast food burger flipping robot works for $3 an hour. Remember, these robots will never get tired, will never get sleepy, will never take breaks, will never take vacations, will never take maternity leave, will never take family grieve leave. They will be working around the clock 24/7. Concentrating on the front end of the restaurant, operators and managers will likely have to readjust the dining floor with social distancing plexiglass dividers at tables. Ultraviolet thermal body scanner at the entrance, and increasing online delivery via food lockers. We still don't believe you. We don't think the technology for that is even in existence. That's not true. It's not true at all. You're a liar. You're a liar. You're just a big fat liar. Liar, liar, your pants are definitely on fire. Okay. I will see your liar and I will raise you something very frightening in return, because people think that you like to make things up. They're treating me like the 2-year-old who says there's a monster under my bed. You do not take me seriously at all. And you're probably laughing, but like Mama used to say, he who laughs last laughs best. Therefore, let me hit you on top of the head with this image. Dun, 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 dun. How you like me now? Ladies and gentlemen, that is a plexiglass divider between tables at a restaurant. You can't make this stuff up, ladies and gentlemen. Deal with it. This is your new ultimate reality. How is it going? Talk to me. Hang in there. We're with you. Hang in there. Don't you die on me. Here we go. We went from plexiglass. I hope you're looking at this, ladies. I hope. Don't you back away. Take your medicine. Swallow that pill. Swallow it. That first image with the plexiglass was a New York City, Brooklyn chop house plexiglass divider. The image you're looking at now is an ultraviolet thermal body scanner, an ultraviolet thermal body scanner. And yes, these things do exist. Take a good look at that. So you think that people be play pimping. This ain't no fun and games. This is real, man. Deal with it. Now, the last image is going to really challenge you. Do not panic. Do not panic. Take your medicine. This image here is the Brooklyn dumpling shop. Rapid pickup. Food lockers. It exists, ladies and gentlemen. It already exists. You think that we were making this up? Did you really believe? Did you really think that? Really? Really? No, ladies and gentlemen, no. This is all reality and it already exists. This is not some type of a futuristic thing that they're thinking about doing. No, it exists today. It exists now. It's already in use. It's already being used. What are you talking about? I warned you. I told you they were coming for your jobs. What did you think I meant by that? I said they're coming for your jobs. Your jobs. That's right. You thought you had nothing to worry about? You thought because you play by the rules, you practice social distancing, you take the virus pandemic seriously, you don't question authority, you don't really talk about controversial issues, you don't engage in any of that stuff, that you're just going to be fine. They'll leave you alone because you're a good little happy home hunter citizen. No, you're not. Let me show you what they have for you. This is for the sheeple out there. This is for you sheep. You ain't going to like this next one, but trust and believe. This is already real. It is already happening. Like my man, L.A. Marzulli, he always says, the situation is burgeoning and not going away. Well, ladies and gentlemen, this situation is definitely burgeoning and not going away. All right, this is here to stay. This is the new normal, the new reality. You said you could handle this. You said you wanted the red pill. Well, here it is, ladies and gentlemen. This is your future. You're already in a George Jetson world, and it came upon you when you weren't paying attention. This here is what they will have you doing. Living in bubbles. That's right, folks. Living in a freaking bubble. Another way to boost sales and save the collapsing restaurant industry is to install plexiglass bubbles called PlexEat, which are suspended from the ceiling and sit around a patron's head. At the same time, they have dinner, ensuring social distancing and a reduction in virus transmission inside the facility. This is what they look like. Plexi. While robots and social distancing measures seem radical and quite frankly absurd, they could be the new standard for restaurants and bars in a post-corona world. However, there's a trade-off. The automation part of this will lead to permanent job loss. Deal with it. Deal with it. Now, I want you guys to go even deeper. You're going to have to hold your head underwater a little longer. You cannot come up for air yet. I want you to think about what is happening. What is happening? All right. I want you to look at this. I want you to look at this one more again. One more again. All right. One more again. All right. Here we go. You see this picture, right? You see the lady standing there enjoying a meal, right? In a bubble, in a freaking bubble. I have a question for you, ladies and gentlemen. If this was not a pandemic, then explain this picture. What you're looking at is something that is already been produced. Why is it produced? What is the need for this? Who would use this? Who would even talk about this in 2018, 2017, 2015, 2016, anytime before the pandemic? There would be no need for this. This would be a laughing stock. It would look, oh man, that's corny, that's stupid. Which means this was in planning. This was planned before it happened. This is research and development and money and investment. People went through a lot of trouble to have this in place and ready for now. It's ready for now. If there was no pandemic, then why does this already exist in a final stage? This is not a drawing. This is a factual piece of equipment. I'm going to hit you with something else. I'm not going to name the name of the hospital. I'm not going to do that. I'm just going to hit you with some facts that at the time I thought it was weird, but now it makes absolute sense. And it proves even further that this pandemic was planned way ahead of time. Way ahead of time. And I have more proof. I have more evidence that this was planned way ahead of time. I want you to hear what I am about to say because this is a true statement, a true story. It's not made up. It's not fictional. Okay? Deal with it. In 2019, last year at some point, during one of our office visits, I had a doctor's appointment. My wife and I were walking through the hospital, and I saw all these weird things around. I saw these metal detector type things and all types of things that had arrived to the hospital. Now, it's to be fair, this hospital is a teaching hospital. This hospital is a large hospital, a large organization, and they have a lot of medical conferences and stuff. Big conferences, large conferences. And during one of those times, I saw these partitions and all this equipment, and it looked really weird. I was like, who would want to bring a gun to a hospital? Who would? This is weird. Who? Like my man Cannabis said, the rapper Cannabis, one of his lyrics was like, "Who would want to blow up a hospital? You stupid." Yeah. So I'm like, this doesn't feel right. This is weird. What? And this was around, I think around summertime. Around summer. So last summer. And I just thought it was really weird, man. And I asked someone about it, and they didn't really have anything to say. They was like, "Oh no, no," and it was really weird. There was no talking about it, no nothing. Just they brought all this equipment in, and they put it at different locations and stuff, different entrances of the hospital and stuff. And this was some weird stuff, man. It didn't make sense to me. And then when we came back the following visit, all the equipment was gone. And I was like, wow, what did they do with all that? That doesn't make any sense. What in the world? Now looking back, it makes 100% sense. The equipment that I saw back then is now being used today in a pandemic world. They were preparing for the pandemic, you guys, a year ago. I saw it with my own eyes. All the equipment, all the stuff, the social distancing and the partitions and the metal detector type things, temperature stations, all of that. I saw all of that stuff being moved in a year ago at a particular hospital. How do you explain that? Now, I go to this hospital a lot, all right, often, and I didn't see that equipment. Now all of a sudden, the equipment is being used. So what were they planning for? Why did they have all that equipment and have it there for a day, and then the next day it's gone and you don't ever see it again, and now the equipment is out? That's called prepping, people. It's called prepping. They were prepping, preparing for this moment. How else do you explain that? You can't. You cannot. You cannot. Here's what you can expect. Here's something else you can expect in the near future. America's largest mall operator sues the Gap for $70 million in back rent. And they say, we still expect to be paid. Largely shafted by the stimulus bills as Democrats tried to prevent any federal money from going to Trump's real estate friends, landlords have grown so desperate for revenue that they're resorting to extreme and potentially burdensome tactics like taking tenants to court to try and squeeze more blood from a stone. Simon Property Group, one of the biggest, if not the biggest mall operator in the United States, is suing the Gap, one of its largest tenants, claiming the retailer failed to pay more than $65.9 million in rent and other charges due during the coronavirus pandemic. CNBC, which brought the story, says the battle is unfolding in a Delaware state court after all the courthouses were closed, ladies and gentlemen. The lawsuit highlights the mounting tensions between retail landlords and their tenants, many of which stopped paying rent after the crisis forced them to shut stores. It was filed on Tuesday, and a reporter at CNBC was apparently told to expect more lawsuits, apparently by somebody at SPG. The Gap hasn't been paying rent isn't a surprise. The company shared its plans to stop paying rent and other monthly expenses with shareholders' savings that is projected would put $115 million a month in Gap's coffers. In total, SPG's malls have 412 Gap stores, which makes Gap and its Banana Republic and Old Navy brands as one of the company's biggest inline tenants. And Gap warned shareholders about the prospects for litigating stemming from this decision back in April. Gap also warned in late April that litigation could arise as a result of its skipping payments. Although we believe that strong legal grounds exist to support our claim that we are not obligated to pay rent for the stores that have been closed, there can be no assurance that such agreements will succeed, the company said in a filing with the Securities and Exchange Commission at that time. SPG CEO David Simon said his company still expects to be paid for the months those stores were closed, payments that would be a massive burden on Gap, which is already allowing burdensome debt service to eat into profits. Let's take a break real quick here. So, on the surface, we see a corporation saying that they have a right to not have to pay rent and are willing to take this to court to have a judge rule in their favor that it's okay for them not to have to pay rent, that sets a very frightening precedent. Because if they can do it, that means all other companies can do it. And if all companies can do it, then why not individual citizens when it comes to paying their mortgages and paying their rent? See where that goes, that slippery slope? But I'm going to present to you another situation. Are you ready? Here it is. Here it is. I believe that this is really a backdoor agreement between the two companies. Sounds like a shock, don't it? Let's get conspiratorial. Remember, they said that when Trump announced that they were going to be helping smaller businesses and large companies during the crisis, blah, blah, blah. And then there was a report that a lot of people didn't get the money, and those that did get money didn't get nearly enough money that they needed, blah, 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 blah. I believe this is a secret way, a backdoor way to push some legislation. See, if these two agree to go to court and go and battle this, then it can put pressure on the Trump White House to bail out retailers. Think about it. That's why they're doing this, to force the government's hands so that they don't have a choice. Because the landlord is saying, I need my money, right? And Gap is saying, we want to give it to you. So why don't we do this? Why don't you take us to court, right? And then, we're not going to be able to pay you or whatever. And then what we'll do is we will go to the government and claim that we're too big to fail. And if you win your lawsuit, we have to file bankruptcy and lay off, 1 million employees. And so the landlord says, yo, that's a slamming idea. All right, let's do it. Bet. Oh, but you got to agree though. If this backfires, you can't, hurt us. You got to go and seek it from the government. And they say, yo, this is what's up. This is how people do things, folks. I'm telling you, this is how it rolls. Now, we'll know if I'm right because it's going to come out in the headlines. We'll know if I'm right. If you hear that the government is bailing out the retail sector, then you're going to see what I say. But this is my theory on this situation. Get ready for the avalanche of lawsuits, ladies and gentlemen. As the tsunami of defaults, evictions loom on the horizon, struggling debtors can't kick the can down the road forever. Even as the U.S. stock market is on fire to the upside, and people anticipate a quick recovery as economies open up, a tsunami of defaults and evictions loom on the horizon. All right? This is what it is, ladies and gentlemen. The mainstream narrative has been that although the coronavirus shutdowns have they have straight up rocked the economy. It's not a financial crisis like we saw in 2008. Back in April, Peter Schiff said that we were absolutely heading toward financial crisis, and it will be worse than 2008. Obviously, if people aren't earning as much money as they were when they were working, especially small businesses, they're not paying their loans. So the banks are not getting interest payments. They're getting defaults. When you have a credit bubble, when the economy is built on a foundation of debt, and then something happens to shake that foundation, you have a big problem. Until this point, government intervention and leniency from lenders have put off the inevitable, but struggling debtors can't kick the can down the road forever. Ladies and gentlemen, here's something that is not being said. I haven't heard it said anywhere. Do you understand the monumental collapse this economy is about to go through? And do you know what the biggest story is that people aren't talking about? It's the same big story that you didn't hear until 9/11. Are you ready, ladies and gentlemen? Let's get ready. Here you go. What is one of the biggest consequences of 9/11 that happened? One of those unintended consequences. What was it? What was it? You guys don't remember, do you? I'll remind you. The complete and utter collapse of the insurance industry. Yes, yes, yes. The property and casualty insurance industry went crying to the president, went crying to say, yo, ain't no way in the world we can meet this kind of a demand. This is crazy. We can't pay these claims. We will go bankrupt if we pay these claims, ladies and gentlemen. Government, help us out, bail us out. Well, now you're about to see that times 100. That was just 9/11. What about now? Do you understand the amount of carnage that has happened since these riots in just about every major city? Are you kidding? The insurance companies are going to be on the hook for billions of dollars with a B. With a B. Now, I'm just talking about the riots. Now, let's talk about the other side of the coin. Remember, ladies and gentlemen, when people get FHA loans, they get what is called mortgage insurance. When banks lend money, especially mortgage loans on the commercial paper side of things, the banks also have takeout insurance against default. Did you know that? Did you know that? Well, what's going to happen when the defaults start rolling in and the lawsuits start flying? The insurance companies are going to be on the hook for billions of dollars. Billions of dollars. The insurance companies right now are in jeopardy of going under, and I mean all of them. If the big ones fall, what do you think the little ones are going to be able to do? So that's a news article headline you have not heard yet. So I'm giving you futuristic headlines. Okay, insurance companies are going to be on the hook because they are a big player in the housing market. Mortgage insurance, and then there's a special insurance that the conventional bank loans get on you to cover, default when you purchase a house, and that's usually one of your lines. I've been out the game so long, I can't even remember the lines and the paperwork and all that stuff. But you guys know what I'm talking about. One of those lines under your closing costs. There's one of those lines is for insurance. All right, it's not for you. It's for your bank. So if you default, they get compensated. All right, and really they get double compensated. Okay, so all I'm saying, folks, is get ready because the insurance thing definitely will be the thing that destroys the markets in a way. Now let me tell you why. Let me tell you that mortgage insurance is it's like what, a couple of $1 trillion if you add it all up. But guess what's thrown in there, ladies and gentlemen? Are you listening to me? What do insurance companies invest in when they invest? I'm not talking about the mortgage. What do the mortgage companies? What are the banks? What do insurance companies? What do they put their money, ladies and gentlemen? Because they can't buy stocks, so what do they buy? Bonds, 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 U.S. Treasuries, bonds. What's going to happen when the insurance companies can no longer sustain? What happens with those bonds, those T-bills, those treasuries, baby? You see where I'm getting at? You don't hear these headlines. You don't hear these headlines. You only get that here on this live stream right here. I'm warning you that the snowball effect that is going to come from the insurance industry is going to be, in my opinion, the straw that breaks the bond market's back. You heard it here first before you see it in the headlines. Now, you already know My rally and crash alerts from the PulseWave price trigger reports lead the market 3 to 5 days out. Well, these futuristic pieces of information that I give out can lead 3 to 5 years out. All right, that is the way those move. Oh yeah. So within the next 3 to 5 years, I believe the country will be in full collapse, and it will be nothing to stop it except war, because war is a racket. Are you listening to me? Are you hearing this? According to the latest available numbers from TransUnion, about 3 million auto loans and 15 million credit card accounts are in some kind of program to let people skip or make partial payments. And NPR contends this number is probably well understated. Meanwhile, homeowners are struggling to make mortgage payments. According to the analytics company Black Knight, 4.75 million homeowners have entered into forbearance plans. That represents about 9% of all mortgages. Banks and credit card companies can't let people off the hook on payments forever. Some smaller lenders are already hurting. American Financial Services Association President Bill Hempler told NPR that finance companies need a government conduit so they can borrow money themselves. If we can't keep the lights on because these things have seized up, it's not good for anybody. It's not good for the customers. It's not good for the company. It's not good for the economy. When the money lenders need to borrow, that might be a problem. Think about it, people. July will be a key month. That's when the enhanced unemployment benefits will end. And that could tip things into full financial crisis mode. Many of the 40 million plus Americans who have lost their jobs over the last 2 months are only able to keep up with payments because of these benefits. An affordable housing advocate told NPR an end to enhanced unemployment could put thousands of people on the street. Thousands. We're talking about homelessness, people, at a catastrophic level. When the $600 a week unemployment insurance runs out at the end of July, most people expect tremendous displacement risk. Evictions are likely to go through the roof. I see a backlog of 2 years in the landlord-tenant courts across the nation. Cass Smith in the live says Aussie banks have just made changes to this effect. We have to have 20% deposit so we don't pay the LMI. Now I know why. Thank you. You're welcome. Kyle says you can't freeze people's income and keep the liabilities running. Exactly. See, we have the smartest listeners on the planet at the PreMarket PulseScan report. Consumer debt was already surging before the pandemic, and policymakers are counting on even more debt to spur a recovery. But Americans were driving the economy with borrowed money before coronavirus. At the end of 2019, total consumer debt stood at 19.3% of normal GDP. This was the highest level ever. Even before COVID-19, we're asking how long the borrowing could keep going and warning that when it stopped, economic growth would likely stop along with it. Now, the powers that be are depending on more borrowing to save the economy. People can only borrow so much. Credit cards have a limit, and a lot of people can't even make payments on the debt they already have. As Peter said, despite the mainstream narrative, we have the perfect storm for a financial meltdown on the horizon. Financial meltdown on the horizon. It didn't say market meltdown on the horizon. It said financial meltdown on the horizon. Deal with that. Let that marinate. Think about it. It's coming, ladies and gentlemen, whether you want it to, like it, or not. If you shut down the economy, how do all the people with debt pay their debt? And if the debt isn't being paid, then by definition, you have a financial crisis. That's why the real estate crisis was a financial crisis. It wasn't because real estate prices went down. It's because real estate prices going down meant loans that were collateralized by real estate weren't getting repaid. And to the extent that the banks had foreclosure, the collateral wasn't there to make the banks whole. The same thing is happening now. The banks are even more exposed today than they were in 2008. This is an even bigger crisis now than it was in 2008 because we have a lot more debt. We have a lot more borrowers who are in trouble. Peter also noted that the Fed's response is an indication that this is a worse financial crisis than 2008. And I have to agree with him. Look at the government response. The Fed is doing everything it did during the last financial crisis, except way bigger and way sooner. So if they're doing all the same stuff, only they're having to do more of it, they're having to do it at an even greater excess. Then what does that tell you? That tells you this is a financial crisis just like the last one, except it's bigger. It's a worse financial crisis. A lot of people still anticipate a quick recovery once governments open up their economies. But that seems like wishful thinking given the levels of debt. There could be a lot of pain ahead. Ladies and gentlemen, let that marinate. Let it marinate. You're going to need to let that marinate for a minute. All right? So far in 2020, we have already been hit by a major global pandemic, an economic depression, and the worst civil unrest in decades, ladies and gentlemen. This wasn't supposed to happen. Once states started to reopen their economies, the tsunami of unemployment was supposed to end. But instead, we continue to see Americans lose jobs at a pace that is far beyond anything we have ever seen before in all of U.S. history. All the way back to 1982, there was a week when 695,000 Americans filed initial jobless claims for unemployment benefits, and that all-time record that was never broken until this year. Deal with that little fact, that little factoid alone. Think about it. Think about it. Let it marinate. Where do we go from here? Where do we go from here? We're going to go to a tsunami of defaults and evictions, ladies and gentlemen. That is the next step. It's the next step. Oh, and did you know that dangerous nanoparticles contaminating many vaccines? Well, there's a groundbreaking study about it. Did you know that? Yeah. See, you got to look into stuff. You don't just take things at face value. Now, I told you this a few days ago. I don't know if you remember. I don't know if you've been paying attention, but there's a Davos group announcing world government to force Great Reset. Major globalist think tank calls for great reset of capitalism in wake of COVID lockdowns. The World Economic Forum is urging a great reset, leveraging the COVID-19 lockdowns to transform all aspects of our societies and economies. Again, you can't make this stuff up. You cannot make this stuff up. Ladies and gentlemen, this is another thing you got to deal with. These are things that I know is coming at you fast and furious this morning. I know. I'm sorry. But I told you this was going to happen. They claim that we can emerge from this crisis a better world if we act quickly and jointly. The changes we have already seen in response to COVID-19 prove that a reset of our economic and social foundations is possible. This is the best chance to instigate stakeholder capitalism, and here's how it can be achieved. Ladies and gentlemen, you don't have to take my word for it. It's already in the works. Let me just drop this little nugget in the live chat. Here's a little link for you. All right. Like I say, you ain't got to take my word for nothing. Look at it yourself. All right. I'm just saying. All right. Don't listen to me. It's right there in writing for a. By the way, to let you know the insanity of the American people, this is definitely America's fault. This whole looting thing is all about, it's their fault. It is America's fault. Dumbing down in the school systems, all about propaganda instead of real education. This is the result. This is the result. I'm so sorry to have to tell you that. This is what you're dealing with. This is what it is. Looters are looting. Looters loot. Say it again. Looters are looting. Other looters loot. So the looters are looting each other now. Footage out of New York showing looters stealing stolen merchandise from another looter perfectly encapsulates the chaos that ensued in the wake of the week's Justice for George protests. In the video from Tuesday nights in New York City, a cameraman captured a looter trying to calmly walk away from a vandalized Apple store with a large box containing a stolen iMac. But other looters spotted him making off with the expensive computer and soon swarmed him, forcing him to drop the box to defend himself. Meanwhile, another rioter dressed in black picks up the box and walks away. Oh my goodness. I have to tell you guys, this is ridiculous. This is ridiculous. If you would like to see that video, I will drop that link in the live chat as well. There you go. Hilarious. I tell you, hilarious. Amazon censors former New York Times reporter's book exposing COVID-19 lockdowns. Elon Musk responds by saying it's time to break up Amazon. Former New York Times reporter Alex Bernstein posted a screenshot to Twitter showing Amazon Kindle refused to sell his new book, Unreported Truths about COVID-19 and Lockdowns, Part 1, Introduction and Death Counts and Estimates. They censored it. It is based entirely on published government data and scientific papers. It doesn't say coronavirus isn't real or doesn't kill people. In fact, the worst case death toll is likely to be striking to most people. And Amazon won't run it. Amazon's message to Bernstein stated, "Your book does not comply with our guidelines. As a result, We are not offering your book for sale. Due to the rapidly changing nature of information around the COVID-19 virus, we are referring customers to official sources for health information about the virus. Please consider removing references to COVID-19 for this book. Today, Amazon refused to publish his booklet about the coronavirus because it did not comply with their undisclosed guidelines. This is outrageous censorship from a company that has gained hugely from lockdowns and dominates the US book market, especially with stores closed. Tesla CEO Elon Musk chimed in on the post, tagging Amazon CEO Jeff Bezos in a message saying, "This is insane. Time to break up Amazon. Monopolies are wrong." Exposing Amazon's glaring hypocrisy, Berenstein reflected on the time Amazon wouldn't stop selling a how-to guide for pedophiles and only backed off after it was forced to. Wow. 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 From pedophilia to domestic terrorism, check out more books being sold on Amazon in the following posts. Unabomber Manifesto, the Anarchist Cookbook, My Daddy Puppy Farm book. Wow. Pedophilia and Empire, Satan, Sodomy, and the Deep State. Trump Revolution Book 13. Wow. Wow. How long can America survive without a free flow of information? You see all these different attacks. It's off the chain, man. It's off the chain. You can't make this stuff up, man. You can't make this stuff up. Okay, in the live chat, what do you think about Silver Scott Mines Inc.? That's a good question. What do I think about Silver Scott Mines Inc.? Let me first see if it's even in the system. Give me just a second and I'll tell you. Let's see. All right, let's see here. All right, that's not something that's in the system. So if you give me a second, I will add it to the system, and then I can give you an opinion. All right, let's see here. Let's take a look. Let's take a look. See, just take a second. Just be another moment. I'm adding it to the system, and then we'll let it run through the PulseWave price trigger report, and then we'll take a look. See. I know we covered. Someone had asked me about this, about one of these mining stocks. I don't. Not last night, but the last night before, I think. I don't know if it was this one. It wasn't this one. That's right, because it's not in the system. So I'm adding it now. That means for everyone who is a member of PulseWaveTrading.com, you will also have this available for you. It will be under the U.S. equities report. Okay, just want to put that out there. All right, so now that we have that, let me go in and pull up the chart for this one. All right, let's see here. All right. Silver Scott Mines. All right, so this is, all right, let me check one other thing. Got to make sure I have the right thing up. Okay, so looking at the daily chart real quick. All right. All right, looks like this is, yep, trading in the pennies. Okay. All right, gotcha. All right, let's go ahead and flip the screen here to the chart. All right, so this is what the algo chart has for the silver mines. I just pulled all the data from the exchange. All right, ran it through the system, and today it's supposed to be operating under a rally alert. We did create a bullish pointer from yesterday's activity. It is in a bull market, even though it doesn't really look like it here. There's just not a whole lot of data. According to the way this thing's been moving around, it's kind of in a weird place. It is a penny stock trading around the 10-cent level. All right, so coming into today, there was a rally alert. You got a bullish weekly trend momentum reading. Technically speaking, this particular stock, in order for it to maintain a bullish outlook, is going to need to close above 0.1142 cents. All right, so that's 11 cents basically. Currently, this market right now as we speak is not doing that. Unfortunately, you have what is called an inside day happening, but on the weekly chart, you're having an inside week as well, where all you're doing is trading last week's high and lows. You're not doing jack. All right, and that's on the weekly chart. The daily chart, today's bar is almost identical to yesterday's bar, pretty much. So that's what's going on with the Silver Scott mines. All right, you say it's up 825.68% over the past 6 months. Yeah, I guess you could say that. You can make that, but I mean, but to me, this is me. I'm not poo-pooing it or nothing like that. But a move from a penny to 10 cents, that's not what I'm looking for. I'm a lot greedier than that. If I'm buying a penny stock, I'm hoping it to hit the dollar mark. If it can't get over $1, I'm not really that impressed. That's just me. All right, I'm not saying nothing bad about those that have invested in it or nothing like that. Just from my perspective, I'm not impressed until we can really get it on and popping. All right, now a word of caution on this one. It is officially under a bull market correction. It hit a high of 29 cents. The high is 29.99 cents. All right, and that is a bullish pointer, and it has since retreated significantly from that. The thing about penny stocks is they're mostly pump and dumps for the most part. The price gets pumped, and then the big people get out before everybody else does. In this situation, I don't put nothing with it. I look at charts. I don't care about nothing else. I care about the price. The price is not attractive to me right now. And when I say price, it doesn't mean cheapness. Because if that was the case, then this would be one of the greatest trades in the world, one of the greatest buy instruments in the world, because it's trading at 10 cents. When I say price, it doesn't mean cheap price. It means momentum price. It means competitive price. It means buying something at a price because it's going to go higher. So I don't care if the price of this was 10 cents, a penny, $10, or $10 million. What I care about is the trend. And right now, even though it's in a bull trend, it's not trending right now. It's sideways moving under a corrective situation. Don't take my word for it. Let me show you my other chart. All right, that was the algo chart, which is totally different than all the other charts. Let me show you an actual real time chart. This is the weekly chart right here. This big chart right here is the weekly chart. All right, you see it's been moving sideways. It stopped. It ceased trending. This is the bar right here. This is the weekly bar that produced the bullish pointer. Market tried to make it up there here. Maybe you'll get a third chance. But because this market is looking to close down again today, this is a bearish sign, a very bearish sign. Okay, just want to throw that out there. This market is under a correction, full blown, no ands up or buts about it. So it could head back down to the penny level. You know, just putting that out there for you. Let me go back to the algo chart for a second, and you'll see here that you have back-to-back alerts, right? So you have a crash alert followed by a rally alert on the daily chart. These two cancel each other out and form a trading range instead. Where are you trading? You're trading right within this range. The market has not moved outside of that range today, and you're below a Kumo cloud on the daily chart, which is bearish. Even though you're in a bull market, you're in a corrective bull market, and you've fallen below the Kumo cloud at that, and you're losing momentum. Your momentum's come off. Technically speaking, like I said, unless this thing closes above 11 cents, if it did, it would put in a short-term bottom. If it does not close above 11 cents, it is still bearish going into next week, and we could possibly see more selling. All right, so that is my analysis based on the PulseWave system. So PulseWave says no. If you were on the sidelines and looking to get long this market, the system is saying no, unless it can close above 11 cents today. All right, so that's the analysis on that one. So at the end of the day, folks, it's really, 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 really simple. At the end of the day, it's mad simple. All we're doing is trend following. We're looking for markets that are set to roll, man. We just want to see markets move. We just want to move with the trend of the market. That's all we care about. We don't care about nothing else. We're not following nothing else. We don't care about fundamental analysis or none of that stuff. We just want to be in the right place at the right time, and that's it. So that's why we use the system. It helps us to get there, puts us on the right side of the market, takes the emotions out also. And that to us is a very important aspect of trading as well. All right, so we are done for now. I got more for you, but we're going to save that for next week. We're going to save it for next week. All right. Hopefully you have found this installment very informative. Hopefully you guys have gotten some more intel on what's been going on this week, because it is about to get on and popping. All right. You have your marching orders. I gave you the Take Back Friday numbers on what you can look for. And I think right now the market is definitely on course to do it, thanks to the Federal Reserve pumping. Right now, the Dow is up almost 1,000 points. Almost 1,000 points. But it should make you think, though. I mean, this right here is like, if you can't see the Fed's hand on a day like today, I don't know what else to tell you. The Nasdaq's only up 150. S&P's up 82. And the Russell is up 67. The Dow is the strongest by far. Usually, if the Dow's up 1,000, you could at least expect the Nasdaq to be up, 600. S&P up maybe 200. But you're not seeing that. You're not seeing that at all. So even though this is a nice, powerful rally today, don't get your hopes up. Is all I'm saying. Look at the beating gold is taking. All right. A $50 drop in gold is nothing to sneeze at. That's a ginormous move. We haven't had a $50 up day. So the kind of pullback we're seeing is just the crash alerts I was telling you about in the end of day reports. So it is what it is. Get yourself together, because we're going to see more fireworks next week. The markets are going to save themselves for right now. Just for right now. Okay? But you know the day of reckoning is coming. All I'm saying is look out for the crash alerts, because them things ain't no joke. Just like the rally alerts ain't no joke. Trade what you see. Even though you don't like it, you got to trade what you see. If the Fed's going to continue to push the market higher with these trillions of dollars, then so be it. We'll be on the side of that, and we won't have a problem with it. We'll just keep it moving, keep it pushing. Keep it pushing. All right? With that being said, remember, bulls make money, bears make money, and pigs get what? Destroyed, slaughtered. So remember to take what you can and give nothing back. And remember, I will see you guys back here Monday morning for pre-market PulseScan. Keep in mind that there will be no end of day report on Fridays. We don't do that unless there's something emergency to be talked about. I'll see the rest of you in the trading room. Okay, I got another question. Hey, Dex, do you know a good futures platform besides TD Ameritrade? Their margins are extremely high. Well, yeah, there's Interactive Brokers. I like Interactive Brokers. You got Fidelity. Fidelity's a good vanilla company. They have a really good desktop trading platform. Interactive Brokers does too. So I would recommend those places first, is what I would do. I don't know where you're located in the world, so that may come into play. I know the Interactive Brokers allows accounts from all over the world. I'm assuming Fidelity does too. I'm not sure. So I'll let you have to look into that. All right. With that being said, I will be hollering at you guys on Monday. So we'll have a great weekend. Be safe out there for all this rioting and looting. Don't put yourselves in harm's way, all right? And I will holler at y'all later. Okay, you're in the U.S.? Yeah, then you definitely want to look into Interactive Brokers and Fidelity. Go ahead and try both of those. Those are good companies. I've traded with those outfits. If I had to name my top three, it would be Thinkorswim, TD Ameritrade, Interactive Brokers, and Fidelity. Because I've traded all three platforms and I found all of them to be pretty good. My favorite, though, is just the Thinkorswim. That's just my favorite. All right, with that being said, y'all, I am out of here. Have a great weekend, and I'll holler back on Monday. Peace.